A leader to me is, why does somebody want to follow this person? And it's either because they have a title and they have a very flashy business card, which was either just given to them or because they paid their dues in a company and they were given a very prominent title. And for that reason, they are a leader. In reality is, are they truly a leader, right? Do people want to follow them if they didn't have that title?
Welcome to The Wild Show with your hosts, Will Chang, Lee Chang, and Andrew Su. Today, we are joined by our friend Anthony Tse. Anthony has a background in finance and is a two-time founder. First, at the age of 30, he started his own hedge fund, Pangu Capital Limited. Then in 2018, at the age of 40, Anthony built his own preschool group in Singapore, which was recently acquired. Today, Anthony is starting a coaching business focused on high-achieving professionals. Welcome, Anthony.
Thank you, Will, for the introduction.
First of all, we've all heard that you've just recently had your company get acquired. How are you feeling?
I feel great. Tough to describe in words, but definitely feel it's a significant milestone in my life. And I feel that everything that I've done in the last 20 years or so, this is the culmination of all of that.
Can you just describe what that business that you sold was?
Yes. So it's a preschool group in Singapore. I started off by acquiring. So it's essentially a roll-up. So yeah, I was looking for underperforming, more standalone mom and pop type of businesses. And then I would acquire them and then improve the operations. And over time, institute more systems in place, make it more look like a proper corporation. And then thereafter, I ended up selling it.
So how many preschools did you have in your roll-up before you sold it?
At the peak, I had 5. And of the 5, 4 were acquired and 1 was built from scratch, or what I call greenfield.
Did you build the first ones from scratch and then acquire first?
I actually started with acquisition first, because then this kind of goes into the buy versus build decision. And for me, as somebody that didn't have prior experience in this industry, I made the conscious decision to enter it through acquisition because I felt that it was less risky and to buy an existing business that already had clients, already had staff. And on top of that, then the staff could actually teach me what to do. So at the very beginning, I told the staff, you're all my mentors, you're my teachers. It's just coming here to learn from all of you so you can teach me about this business. And yeah, that's kind of how we started. So out of the 5, the first 3 were acquired. The 4th was built from scratch, and the 5th was also an acquisition.
All right. So did you have any experience before coming into this industry? Because I know that you were originally finance, right?
Yeah, that's right. So a little bit about my background. So the finance is also different types of finance. And I was very fortunate that I was exposed to multiple aspects of it. So I started off in banking, then I moved to private equity and then hedge funds. So both private and public markets. My first experience of actually operating a company was in private equity when I was seconded to work at a portfolio company in China. So that was actually a auto dealership group, which I believe right now is still the largest in the world in terms of number of locations. It has like 300 locations. And when my employer bought it at the time, it had 30 to 40 locations. And so I was actually seconded to work in China at the company as the head of M&A and corporate development. So I was that guy going around China looking for deals, acquiring dealerships, and then helping the group fix them up and really institutionalize the whole business. But at the time, I was only 26 years old. So it was very new to me. And I had a lot of support, of course, from the private equity firm. But so that was really my first experience to being an operator. And then I would say the second thing that allowed me to feel that I could get into the education space was the fact that when I was in finance, which is both private equity and hedge fund, I invested in the education industry, either in private companies or in stocks. So I was more of an investor, but as an investor, you're very removed from day-to-day operations, right? But at least I feel that I can talk about this industry with people. So my knowledge was, yes, I can have a proper conversation with you on why I'm investing in this education business. But of course, the nuts and bolts and the nitty gritty of running an education business, I've never done before until I moved into it myself. So I would say it's a combination of both. And then I was just really looking back at what I really want to do in life. And I actually really missed the operational aspects of finance. I mean, looking at numbers is great. Staring at Bloomberg screen all day is great. But I was looking for something that could combine both. And so that's one of the key reasons why I felt I had the experience to move into something that on the surface appears to be completely unrelated to what I was doing previously.
I wanted to go back to 26 years old. You went to China and you started to help do the M&A process and start operating these car dealerships, right? So you grew up in the States. And so you probably didn't have that cultural understanding of how business is done in China, and also just never had operational experience. Could you just talk us through a little bit about what you experienced during that time?
Yeah, this is mid 2000s, 2005. So yeah, it was a huge shock. I would say that being somebody Cantonese from Hong Kong, working in China was still quite different. But I think a lot of it is you do just go in with an open mind, and people talk about how things are done in China. Like, I think a lot of how things are done in China back then and today is still similar. Maybe the magnitude or of how things are done, certain practices could be different. But in terms of the style, I still think it's similar. I think it's a cultural thing. And for me was that I think knowing the language definitely helps a lot. And I think I just go in with the open mind that I'm just really eager to learn about China. At the time, I was at the front seat of seeing the rise of China. And that was one of the reasons why I moved to Asia during that time. I think that was it. I just used that mindset and then just had great mentors. I was at a great company who gave me the resources to learn about how things are done in China. So I just followed them.
What are the things that stood out to you, like the style, and what are the differences in terms of how things were done in China?
Well, I think firstly, it's the drinking aspect. I think most people who know me know that I can't drink for physical reasons. So that was definitely a huge hurdle for me because it was tough to do business without some kind of alcohol involved. I think that's the first thing. I think second thing is, in which people always talk about, 关系 relationship. Again, to this day, it matters a lot. And I think if you look at Chinese history for thousands of years, it's been the same, right? So at the end of the day it may not be the best deal or the best structure or offer that gets the deal done, but it's who you get along with most or who is part of your clan, etc., right? So I think there are a lot of factors. It's not just very numerical or very, I would say, objective way of looking at things. And so a lot of that is just requires a different mindset. So it's really about how do I make sure this person likes me? Yeah, that's a separate topic that could take a long time to go into.
And then after that, and then after a couple of years after that, you basically started your own hedge fund, right? What spurred you on to do that?
Yeah, so it took actually a few years. So I left private equity, moved to hedge fund, and then the employer I was working at actually shut down in early 2009. This was actually right when the US stock market was about to trough. And yeah, I was 30 at the time, and I was 29 turning 30, and I actually did not think about starting a hedge fund at 30 at all. I knew eventually I wanted to start one, but not at 30 because I knew I didn't have the experience I needed. But when you have no opportunity cost, which is when you get fired and no job, I think starting a business, it's much easier. And a lot of people always think about like, oh, how can you start a business when you have a cushy job, etc. For me, I had no job. So from that perspective, the decision was easier, but it was also very tough because at around 30, you don't really have that much wealth accumulated. I mean, hedge fund requires a lot of capital, right? And so it was a decision where I basically sold whatever I had. I didn't have that much, but in terms of percent of what I had, I put into the business. Yeah, I think that was probably the biggest challenge. And yeah, again, it's one of those where I'm 30 and I'm just going out there and trying to learn everything from scratch on my own. And again, a lot of it was I had mentors along the way. I had my ex-colleagues, my bosses who were willing to help me and answer my questions. So yeah, I did that for about 6 years.
For the audience that doesn't really know what a hedge fund is, could you just go into the process of what is required to start a hedge fund and what did you invest in?
Yeah, so my hedge fund invested in stocks, what we call long short equity, which is probably the most common strategy for hedge funds around the world. Yeah, starting a hedge fund is you need to get a license from a regulator. So for example, Hong Kong would be, say, SFC, and Singapore would be MAS, which is like Monetary Authority of Singapore. So that process actually is quite arduous. There's a lot of legal work involved. And then the funny thing I always talk about is so I had a partner as well. We started together. We're saying how poor we were, that instead of paying a lot for lawyers, we actually learned the process ourselves of how to get a license. So again, we just asked people who went through the process, who paid a lot of money for top-notch lawyers. And then we were able to get the advice from these other fund managers and lawyers for free. And then we just kind of figured it out ourselves and we got the license on our own. So in a sense, yeah, it was kind of a bootstrap in getting the license. And then everything else is the same. You have to get office space, IT, investors. But at the end of the day, is you need the investors to give you capital so you can charge a management fee. And then that management fee is what you use to pay the bills, essentially, to support the business. But one thing that investors always look at is how much of your own net worth do you have committed to the business, right? So of course, the dollar amount is important. But if you're saying, oh, I'm only putting 1% of my wealth in this business, even though it could be a large dollar amount, it just doesn't show that you're really committed or there's alignment of interest, right? Yeah. So for me and my partner, like we put in more than, I would say 60, 70% of our wealth into this business because we just believed in it so much at that time.
You guys were nominated by Asia Hedge and Eureka Hedge as the best new hedge fund of the year 2014. What happened there?
Yeah, so Asia Hedge, Eureka Hedge is a pretty well-known and established publication and database in Asia. It keeps track of the hedge fund returns in the region. And then the nomination and the award is really, my understanding is primarily just based on a numerical return, right? It's very transparent, whatever you publish. And so I think each year there's 8, well, actually they have different categories too. There's long, short, there could be convertible, there could be macro funds. So each strategy would have their own nominees. And then for our strategy, I think there were 4 people nominated or 5 people nominated, I forgot. But yeah, so we were one of them. I think our return for that year was like 20%, which was, I guess, considered pretty good for their database. It was totally unexpected. We didn't win, but we got nominated. So yeah, we're still happy about that.
What was it, do you think, that made you guys have such a big return or successful?
It's tough to say. I think, again, this was really just a few years into our hedge fund. I mean, looking back, you can say a lot of it's luck. A lot of it is really just being really disciplined when things somehow go bad and you can smell that it's bad. You just have to cut loss. Like you cannot be attached and be sentimental. But at the same time, when you're very convicted, this is eventually going to turn out to be right. You just have to stay the course and double down. A lot of times when people are down and they're losing money, they just be like, oh my God, it's so painful. I don't care. I'm just going to get out. But those are actually the times you just have to pile in and bet even more, right? I mean, it sounds like it's very easy and everybody just, oh yeah, everybody can do that, buy low, sell high, right? But when there's a lot of emotion involved and when there's real dollars, as I mentioned, like when you have a significant portion of your own wealth in it, you act very differently, or what you say and what you do could be quite different. So I think a lot of it was, I think having a partner there to be the sounding board. And we always joke about how much pain do you feel right now? Like, is this as painful as somebody like kicking you down there? And I'm like, yeah, it actually hurts even more than that. And then my partner will then say like, okay, then this is the bottom. This is now the time to buy. This is like our litmus test for how painful it is. And then if we say like, no, it's actually not that painful yet, he'll be like, okay, then just wait this out. Like we're not at the bottom yet. So this is seriously what we do. Like we ask each other these questions. So I think having a partner really helps a lot in that sense. But yeah, I mean, we're lucky in the sense that over our 6 years, we never had a down year. We were up every year, even though it could be a little bit or basically almost flattish. but at least we didn't have a down year. The nomination for 2014 was, I think, a 12 months average of 2013 and 2014 or something. But yeah, so 2014 was our best year.
How did you meet your partner?
Yeah, so my partner, he's from my same school, from Penn. He's a year above me. Yeah, he and I always talked about investment ideas. We were at different firms, but we would always just message each other and what are you looking at these days? And he lost his job a month before I did. So you can say timing was great that there are two kids out there who lost their jobs at the same time. And then both of us actually believed in starting a business and also had the courage to really put a lot of our wealth into a business. So I think a lot of factors had to come into play because there were a lot of people who were like, oh, let's start a fund. But number one, they never worked together or didn't really know each other. And number two was neither partner or one of the partners wasn't willing or as committed to bet big on themselves or also the other partner. I believe in my partner. I believe in myself. And so both of us actually sold a lot of things and put it into our business.
On top of that, it seems like y'all had a pretty strong network. Do you think it's because of an overlap between kind of PE and hedge funds, or do you attribute kind of the strong network and your willingness to bootstrap and work hard into that space played a huge part? But do you think there's any factors that contributed to your helpful network?
You're talking about network at that point when we were 30 or just overall, my views of a strong network?
No, at that time, since you talked about figuring out how to get through the regulations on your own, figuring out the space, the IT, kind of all the different factors for setting up the company.
Yeah, I think network definitely played a huge part. I think the network part was a combination, both of our relationships and network. I mean, we had a lot of overlap, but yeah, like he knew a group of investors that I didn't know. I would say the investor that seeded us, my partner brought in because he knew them. So I'm very thankful for it. And then fortunately, we have worked in large firms. And having worked in large firms, we were able to work with very renowned service providers, like some of these large investment banks that you can name. We were their clients. And so when we both came out to start, it was a lot easier to get endorsement from these large service providers because they had already serviced our previous employers. So they knew us already. But of course, like working with us directly at a new company versus working at a previous established employer is very different. But at least it gave us a foot into the door, right? Like when we called up the people, instead of saying, hey, I was working at large hedge fund ABC, I'm Anthony starting out, but it's still the same person I'm talking to, right? I had the number. This was the guy that I had coffee with, and same with my partner. And so we were able to combine these resources and somehow, you just have to find somebody who believes in you. Many people did not believe in us, but all we had to do was find one or two service providers and a couple investors large enough to believe in us to get it started.
How much is required to, from an investment standpoint, create your hedge fund? And then, did you have to pitch them, or is it just basically they've known you for a long time and they just believed in your personal relationship?
Oh, no, I think hedge fund is definitely a lot of it's really about your performance and whether or not you can make money. And then the relationship, of course, matters, but I think that's less so. Because at the end of the day, numbers are numbers. And these investors who invested in us, they have their investors to report to. So it's not just like, oh, I know this guy, he's my buddy, I'm going to shake hands and give him money, because otherwise their investors will complain. And so to answer your question, looking back, we had at least 50 pitches to different investors. We got, I would say, 48 rejections because we had 2 investors who were willing to anchor us. And to answer your other question on how much does this take to start a hedge fund, it's different. These days, it's a lot more expensive, a lot higher than before because all of the costs like regulatory costs, labor costs, rental, everything is just much higher, right? So it's very different. But I would say today, if somebody came to me in 2024 and be like, hey, I want to start a hedge fund. Oh, and also very dependent on geography. The cost of starting something in US is much higher than Asia. I would say maybe just give you some data points, right? If you can start off with 100 million now in any market, Asia or US, that is considered really good, like really, really good. Back in my days, I think if you started off with, and this was more than 10 years ago, this is like 15 years ago, if you could start out with $50 day one, that's also considered like really good, right? But to actually make money, I mean, this is just starting out. This means you're making money. This is basically starting out and just covering the bills, right? So this is kind of what I tell people. Like now, I think if people came up to me and said, if you don't have at least 50, I wouldn't even bother. Of course, you should aim for at least 100. But 50, I would say, is probably the minimum.
Why did you end the hedge fund and end up going back into work for somebody?
Yeah, that's also a great question. So after 6 years, so I was basically 35 at the time. I had just gotten married. And I was thinking, I gave myself 5 years. I said, if I do anything, I have to commit to 5 years. I don't care what happens, 5 years. So it was over 5 years. And I just felt like it wasn't getting to where I wanted to go in terms of size of the business. I think our returns were decent, but we're just not getting the size that we wanted. And so, yeah, at the end of the day, I just felt that, you know what? I've built a track record, which was really the main reason why I started business in the first place. I started it because I just wanted to prove to myself that I can actually manage money on my own and not just be somebody who's recommending ideas to people. I wanted to be the one to say I can call the shots and press the button of deciding buy, sell, sizing, etc. I did that for almost 6 years. And I'm like, you know what? I'm happy with what I've done and the track record, even though the business is not where I want it to go. I can take that track record and go somewhere else. So yeah, I had a chat with my partner and I just said like, yeah, I think it's time to part ways because at the end of the day is I still need to make money. And I look back at the opportunity costs after 6 years of running a startup. Then I start to figure out like, you know what? I did leave a lot of money on the table because if I had just gotten a job elsewhere, I think I would have gotten paid definitely more if I had just gotten a job elsewhere, right? But having started my business was I built this track record that I can now own forever. Right? I can always look back and say like, this is my number. I generated this. Like I never lost money in my career of managing money. I cannot say I made like a lot of money, but at least I can say I never lost money. Right? So that I can always bring with me for the rest of my life. And so I took that and then just ended up going to an established hedge fund to continue to do what I was doing, which is to invest money to do long short equity.
So when you calculated it, if you're comfortable sharing, what size hedge fund would you need to have not left money on the table compared to going and joining a firm?
Good question. I actually never thought about that. I don't know. But I mean, I can say if I was an analyst, like if I was doing what I was doing before I started my hedge fund, over 5 years, I don't know, could have made like $10, $2 a year, just maybe conservative or a reasonable estimation. So that's kind of what I'm getting, maybe like $7 to $10.
Is that mostly based on the AUM, just like the base of capital that you'd be working with?
I think if you go to most established global funds and you do an okay job, I'm talking about like billion-dollar funds, right? Multi-billion-dollar funds. And you do an okay job, not a stellar job. That's probably how much I think I could have made. And I'm also looking at how much I had made previously, right? Using that as a benchmark, like prior to my starting the hedge fund. So yeah, but this is all theoretical, right? I'm just saying like, and looking at my peers who are still working as analysts in a hedge fund at the time, getting paid, etc. I think that was probably a reasonable number to say like, okay, this is how much I could have made had I gone a job and just stayed in a decent hedge fund. So I definitely was not close to making that when we're starting my own business.
I asked that because I think the numbers for a tech startup versus going and working at one of the top tech firms is probably a similar kind of opportunity cost. So thank you for sharing.
Yeah, no, thanks for that question. I never thought about it until you asked me after all these years.
Did you go to London after your hedge fund or?
I did. I went to London for almost 2 years. It was a very interesting experience because I was managing an Asia portfolio out of London. And this is the last thing I would recommend people doing because the time difference is 8 hours. So I was basically nocturnal the whole time. I had to wake up at midnight, 5 days a week. And then I had to force myself to sleep by 5 p.m. so I can wake up at midnight. But I couldn't do that, of course. So every day I was sleeping like 4 hours a day, and my whole cycle was like really messed up. My day would be over by 9 a.m. UK time, which is when my colleagues go to work. That was definitely not healthy.
And then what brought you to Singapore?
Oh, so the firm I was working at shut down. So another firm that shut down. And we can go into this in more detail too, but it's one of those where when you work for somebody as an employee, you realize that you have no control over your own fate, right? So that happened to me once when I was 30, happened to me again when I was, I guess, 37 at that time. Totally out of my control. Then I lose my job. So that was the reason that brought me back closer to home, which is Asia.
And then you did something that I think is new in your career as well, right? You basically started working at a family office.
Yeah. So I moved to Asia. Well, my wife had just gotten pregnant at the time. And then people were telling me, oh, Singapore is a great place to raise a family. So at the time, I was actually still parking myself in Hong Kong. And then I was looking at Singapore for that reason to start a family. And then, yeah, completely out of the blue, then there was a family office opportunity. And then I've never worked in a family office, something that I've always wanted to learn more about. And then, yeah, brought me here. Otherwise, Singapore was never on my radar. Since then, I've been here for 7 years now. So really cannot predict the future.
So can you just describe what a family office is and what makes it different from the other firms that you were working at?
Yeah, so family office is basically when you have a lot of money and you don't want to manage your money with like Interactive Brokers or E-Trade. You want to actually set up a proper, like a company to put your assets in, because then this way you can have a lot of different service providers. People will look at you more seriously. I think that's the one thing. I mean, that's really the key thing, is to really build a proper platform to deploy capital so you can also have the right networks, right? Because Will Chang, as I said, trading with Interactive Broker, you could have $100 million in your IB account, who knows, right? Versus Will Chang, who has a family office with the same amount of money or even less money. It's very different, right? People would approach your family office and be like, hey, we have all these great opportunities. We have these great startups to invest in, VC, whatever, right? They would approach you. So I think that's the main reason why people start family offices. And then there's difference between like single family and multifamily office, right? So I mean, single family, the word tells you that it's really just for one family, right? This is Facebook, all of Zuckerberg's money. So single family. Multifamily could be a lot of people's wealth all aggregated into this vehicle, what we call multifamily. And then there are different things like EAM, external asset manager. There are many different terms, many different types of setup. But yeah, it's essentially is managing money for the very wealthy in their own kind of setup. And so, yeah, I was there for 2 years. It was a single family office. Also, interesting experience. I learned a lot of things. I also realized it's one of those where either you like it or you love it or you don't like it. It's tough to be in the middle, I feel like.
What did you learn?
It's a good question. I feel that from an investing perspective, I don't think I learned anything that was new. Like in the sense that, I didn't think I learned how to invest in stocks in a different manner than before. But things that I learned would be, I built a different network. I think that was very important because once you're in the family office space, then other families want to get to know you and you want to get to know other families because it's like a club, right? It's like we get together and share ideas and we can invest in the same things, right? So I was exposed to a different group of people. So investors were what we call it institutional investors, right? The big pension funds. So they have their own club. And then now it's like the family office. And I go to all these family office events. So I got to know a lot of the wealthy, like Southeast Asian families. When we look at deals, we can be like, well, this deal, the minimum check size is 20 million, but we can only put up like $5. So do you guys want to take on 5? You take on 5, so that's how we all get together, right? So from that perspective, I think that was actually my biggest learning lesson, was kind of how families think and how they network, not so much on like investment strategies, which I had known previously.
So, I mean, you and Lee went to the same high school, right? On PV. And you grew up in the States, Asian American. And I feel like as you progressed in your career, you probably started spending more time with people with more higher net worths, right? And I was curious, as you were, like basically navigating life and as you were spending more time with people with more money, what were some of the things that you picked up or you learned that was different or things that you could use it within your own life?
That's a great question. It's something that I'm also trying to teach my kids. So it's funny, and I just had a conversation with a friend just 2 weeks ago, somebody I had known for over 20 years. And one thing that I learned that I think is very valuable is, how do we retain our true self and our value throughout this whole journey? And what I mean by that is, a lot of people, when they have money, they become somebody else, right? Like their lifestyle changes, just personality could be different. And it's really tough to stay true to yourself. I think that's number one. So like along the way, I've lost a lot of friends too, because we're just very different. Like they live a very, very poshy and extravagant lifestyle because they can afford it. When the money's good, it comes in, they can afford it. And some people just feel that, oh, if you're not useful to me, you're not going to help me close this deal or get to my next deal, you're not worth my time, right? So I think that's one thing that I kind of learned, is that, yeah, people do change a lot when there's money. And this is something my parents taught me when I was young, and I didn't really understand what that meant. And now I do. But at the same time, then you also realize that there are people who are more willing to give as they become wealthy. And those are great people to really be with and learn from. A lot of people say like, oh, I'm going to give back and stuff, but they never do. But yeah, you really do see that, like when people become wealthy, some people become more grateful, more religious, to be honest. Like they just feel like they got to where they are because some of them just recognize a lot of it's really just luck, and they become more grateful. So yeah, I think it's just many different personalities come out when you see money, but usually by the time we're like 40, like now mid 40s, right? I think your true self really comes out, right? Like you are who you are. If you're an asshole now, to be honest, you were probably an asshole 20 years ago. We just didn't see it. It wasn't amplified with money. So I think it's really, how do you stay true to yourself? And so at least for me, I tell people the same thing, which is I'm still the same. Like I dress the same. I'm basically wearing the same stuff as high school. It may not be the same brand, but like, if you look at my photos and everything, it's always flip-flops and t-shirt and shorts. I don't drive extravagant cars or whatever. Like I take public transport because that's what I enjoy and I love, right? I always fly economy. And yeah, so I think it's a lifestyle that you just have to really be vigilant of.
So is that the part of working in the family office that you found that you did not enjoy?
No, I would say, so family offices also are very different. Some are extravagant, some are very down to earth. So yeah, I've seen many elements. Like the one that I worked at was actually very down to earth. So for that, I'm very grateful, like our values are aligned.
But the process of finding deals, rubbing shoulders, going through the process of that networking, was that not palatable to you?
Maybe family office, go a little bit more into how some of them are set up. Some family offices could be set up in a very institutional manner, which is there's a proper investment committee. People really vote on things as if you're working at a proper company, right? People have like an equal say. There are a lot of families where it's just run by a family member, right? It's like you can do whatever you want. You really believe in it. You know it's a good investment, or you know it's a shitty investment, but then the family member basically has the final say, right? So again, in that scenario, it depends on whether or not you're on the good side of that family member. So it becomes very political. And again, it goes back to guanxi and everything, right? That's why it's either you love it or you hate it. Either you get along really well with that person who has the final say, or you're in one that's more institutional, like a proper company and with a committee and stuff, right? Yeah. So tough to say. And every family, the style is different. And so, yeah, today when people call me, oh, should I work in a family office? I give them the same answer. I said, I have no idea because it's either you love it or you hate it. It's tough to be in between unless you know the gatekeeper. And gatekeeper is the one, either the family member or the one who has direct access to the family. It's kind of a gamble.
Yeah. Working in that industry now, I can very confidently say it is definitely that dichotomy. And I think a lot or the majority are the latter that you described, because a lot of these founders are so used to getting their way. So when they run a family office, often it can be kind of a continuation of that mentality, right? So I wanted to go back to looking back at your career, because not only did we go to high school together, Anthony, one of our past guests, which is a good friend of yours, Alice Cow, also went to PV High, right? And the funny thing is, we realized we played basketball together like 25 years ago at the high school, but I didn't know you very well. But I remember Alice had told me you were always extremely driven, like you were extremely smart, but also very ambitious. And I'm very curious, when you decided to go into finance and throughout this time, was this like you in your element? Were you happy doing what you were doing because you were good at numbers and you felt like this was your calling? Or was it more so you want to make money and you wanted to see how far you could push yourself?
It's good you asked that question. Oh, by the way, just as an aside, I am actually in the process of finishing a memoir. Hopefully in the next month or so, there is a chapter dedicated to this exact question. Why did I get into finance? And so for me I remember this conversation I had with my dad when I was young, and he was asking me, oh, what do you want to do in the future? And then I'm like, I have no idea what I want to do in the future. This is probably like when I was like 8 or 9 years old. And then he was telling me there's something called finance. And my dad was not in the finance industry. He's not highly educated. And then he was just telling me like, oh, there's something you can do where like money can just grow. It's like a tree. It can just grow bigger and bigger. And I was just like, oh, that's so interesting. And that's kind of what got me started to pay attention to finance. And then I heard about this thing called Wall Street. That's it. Like, oh, there's a thing called stocks and a place called Wall Street. That's all I knew about finance. But it was just the idea that, oh, money can actually grow. That was what fascinated me. It's like a game. So to me, today, my favorite game is actually Monopoly still. I loved playing Monopoly when I was young. And to this day, I haven't changed like my favorite game. Yeah, so it's this whole concept of things can just grow on its own. And I'm like, I want to find out how things can grow on its own. I never thought about like, oh, I want to have like a lot of money or live a lavish lifestyle. But yeah, of course, I thought about what can I do in the future that can make money. But I just thought this whole idea of Wall Street was very interesting. I just want to see what it was like. That was basically it.
But once you got in and seeing how the game is played, did it increase your fascination or did it become monotonous? Because I feel like people in finance, it is a rat race for one, right? To your point. And I can attest to you being very grounded. I remember picking you up in LA. We were hanging out that one time and you were just in shorts and flip-flops. And I was picked you up from your dad's house and it was very simple, right? I could tell that was the kind of mentality that you grew up with and the one that you maintained. And so were you beholden by the rat race that is finance, Hong Kong, that kind of entire culture? And yeah, so going through that, like at what point, like were you happy doing this, right? Like was it something where, obviously we're getting to that point where you since left finance to an extent, right? I know you still coach and you still do a lot of advisory, but some people stay in this for like their entire career, right? And so that wasn't you or that isn't you. So can you talk a bit about that, like why that is?
Yeah. So I think finance is an amazing industry to be in, right? Like it's definitely non-monotonous. There's things that you can learn every day. I think it's an industry where you have some of the most ambitious and intelligent people. So yeah, definitely can continue to learn from them. The only reason I don't do this as a full-time job anymore, invest full-time, is because I realize I can actually do this on my own. And I spent a lot of time figuring this out, like thinking about what I want to do next. I love finance. I love to invest. Like this is something I will do until the day I die. I'm actually very passionate about investing. What is investing to me, right? Investing is actually just going back to the same analogy. I'm planting a tree. I just want this tree to keep growing on its own. when I'm sleeping, when I'm doing whatever, it just keeps growing. That to me is investing. So I love doing that. But then I also realized that I want freedom, right? To me, that's the most important value in life for me, is the freedom to do whatever I want, which is to control my schedule, to say no to people whenever I want to. And so I realized that I can still invest in my own capacity without working at a large company, because a large company, essentially, as I said, is just a big platform where you have a lot of network and people go to you for investment opportunities. So I've been able to replicate that in a much, much smaller scale, of course, over time. And so, yeah, now I'm still doing the same thing I'm doing when I'm working for somebody, except that I have all the liberty and freedom to do whatever I want. So to me, I think that's better.
I love the aspiration for freedom. I think it's a value that very much resonates with me. I think the thing that I've found that could be tough with trying to maintain freedom is how much harder you have to work to kind of build and keep a network. So I was wondering if you've had a similar experience, and if so, kind of how you've continued to meet people and maintain a network.
Yep, that's a good point. So yeah, I struggle with that. Before I left investment management full-time, I was thinking, what will I forego most by leaving full-time? Number one is the network. I'm like, well, I've spent 20 years building this network. I don't want to just throw it out the door. So what I did was, which is what I'm still doing, is that I ended up being an independent director of funds. So I sit in the boards of hedge funds, private equity vehicles, VCs, etc., or like real estate companies. So being a board member of these companies, I'm still in the industry. I'm very plugged in, and I still attend the same events. I can still maintain my network. Everybody that I worked with in the past, I'm still in touch with. The only difference is I used to be the client when I was the fund manager, and now these fund managers are my clients. So basically it's just a table, I'm not sitting on the other side of the table. But aside from that I'm still plugged in. I still go to the events, and I still travel and meet my clients, finance industry, the same banks. So yeah, that was the biggest concern I had, and I was able to solve that by coming up with something different. So I've been doing directorship now for about 4.5 years, as I was also running my preschool.
So you talk a little bit about why you left your cushy finance job, the freedom, and how you hedged some of the things that you might lose by being on boards. But could you just talk a little bit more in depth about that process of quitting your job and going into starting the preschool?
Yeah. So starting a hedge fund at 30 versus starting a preschool at 39 is quite different. Because as I said, when I was 30, at that time, I had no opportunity cost. I was fired, right? 39, it was like, man, this is a cushy job. Like I can just sit here and clip coupons until whenever, right? When I retire and have a good lifestyle. But then for me was like, to me, I care most about freedom and purpose. I need to have both. And so when I look in the mirror every day, I'm like, is this the kind of life I want for the rest of my life? Am I excited about waking up tomorrow and the day after doing the same thing? And I wasn't. So I'm like, I'm lacking purpose. So how do I fill that void? I actually spent a lot of time talking to people in other industries like tech. I actually spent like 3 weeks. I took a 3-week break when I was in the family office to California, talking to my friends in tech and startup. And then the other thing was my first child was when I was 39. So I was pretty late having kids. And then to me I just felt like, you know what? The money aspect, of course, is great. No one's going to say no to a steady, cushy income. But I also felt that I'm 40 and this is like the last chance for me to do anything. And the funny thing is people are like, oh, you have kids. You should not be taking any risk. This is a time to be more risk averse. But for me was because I have kids, now I really need more time with my kids. I want to spend time with my kid because once my kid grows up, I'm not going to have time anymore for them, or they won't have time for me. So I actually spent maybe a year really thinking about this, just talking to many different people. And then that's when I decided like, okay, I'm just going to quit and start a preschool. And then maybe your next question is why preschool? So again, it's a very opportunistic thing. It just happens. I was looking for preschools for my daughter, my first kid. And I just didn't like any preschools I saw in Singapore. And I said, I'm going to raise my kid according to my own philosophy, but how do I do that? I didn't know how to homeschool a kid. So I was like, hey, maybe I can start my own preschool and then hire my own staff and everything's mine so I can educate my kid a certain way. I mean, that was really how it started. And then I'm like, oh, well, it's just, I mentioned earlier why I think I can move to something that was unrelated for the reasons I mentioned, which is I'd done something operational previously in private equity and I'd invested in education companies and that was it. So I'm like, okay, I'm just going to do this on my own and see.
How did you want to raise your kids? What was the difference between what you were seeing versus what you wanted?
Yeah. So to me is, I think the education system around the world, I mean, there are a lot of reasons why education system is set up the way it is, but we all know that whatever we learn in school may not be applicable to real life, right? Like the hours we spent preparing for an exam. I mean, do we really remember what we learned? Like probably most of it we don't. And I wanted my kids to learn more about things like developing the proper EQ, emotional intelligence. To me, it's all about mindset at the end of the day, right? What separates one person from another is the mindset. How can I get my kid to get out of their comfort zone? How can I get my kids to learn to fail early, to fall early, so they can learn to bounce back up quickly? That to me is more important rather than the schools that I go to. They're like, oh, I'm going to teach your kid phonics. I'm going to teach them ABC at age 4. Or like, I'm going to teach them addition at this age. Like, honestly, to me, none of that really matters. But I know it matters to the academic education system, right? Because eventually you're going to be tested in that stuff. And so, yeah, so I started a school where really we spend a lot more time about things on like EQ, things on getting kids out of the comfort zone.
How did you put together that curriculum?
So on the academic side, that's one of the reasons why I acquired a school. I acquired existing school because I already had an academic curriculum. So we didn't change anything in terms of how we teach phonics or how we teach math or etc. But what I did was my value add in terms of the curriculum was a lot of it was really just the philosophy and how things are taught. Because I always tell people like, well, everybody's looking at the same textbook around the world. Like, how do you teach phonics? Hundreds of millions of people around the world learn alphabet the same way. But why is it they turn out very differently? And so my philosophy is, for example, I tell parents the same thing, which is, okay, if a child is doing a worksheet and if you're a teacher and you see the child is going to get the answer wrong, as a teacher, do you stop the child and be like, no, that's not right. You have to do that. Or do you let the child finish the worksheet and then realize, oh, it's wrong, and then go back and correct their mistakes, right? I would say most teachers would do the former. They would stop the child from getting something wrong. Whereas for me, very early on, I say, you let the child finish, get it wrong, and figure out themselves, right? So one is very simple. It's really just the philosophy and how you teach, right? Or things just like I just tell teachers like, yeah, when a child is still young and walking, etc., either you can follow the child around, make sure they don't fall, or you let them fall. And I'm very direct with my parents. When your child comes here, we will not babysit your child and just follow them wherever they go. Your child is going to fall. So there will be scratches, not because like they're getting injured, but like the whole idea of coming to the school is your child needs to learn to fall, to play in the sand, to get dirty and everything, right? And to be honest, like in Asia, in a lot of schools I saw in Singapore, they didn't really have that philosophy. So I would say the biggest change is really just philosophy and how we deliver certain things. And then the second thing, so my preschool is funny. We actually teach preschoolers the concept of money starting the age of 4. And this took me actually 9 months to develop because it's not easy to teach kids about money. I mean, think about how you teach a 4-year-old or 5-year-old the concept of money. It's not easy. Took me a while to experience, but I personally developed it. And I think it's actually very fun because I had to test it on my own kids because my kids are also students at the preschool. We're definitely one of the few schools, maybe the only school, not just in Singapore, but in the region that teach preschoolers the concept of money. So I would say everything that we teach at the preschool, and the reason I started it is because I wanted to give my kids a very practical education. Like everything that we teach, I know my kid is actually going to use in life, rather than just merely trying to check the box and just prepare for an exam.
How do you teach a kid about money?
Yeah, so we give every child a piggy bank when they come to our school. the age of 18 months. That's when they come in. And a lot of it, again, is habits, right? So like, for example, even at home and at school, it's very similar. Like things like delayed gratification. So I don't give my kids things right away, but you have to teach them that, okay, if you wait until tomorrow, you'll get something bigger or better than today. Because human nature is, I want it now, now, now. I wanted it yesterday, right? So delayed gratification, I think, is one that's very important. You need to instill early on. The second thing that we teach and I teach is that I always tell kids that money is really just a tool to help other people. And so our school is a bit also unique in a sense that whenever there are birthday parties at school, and a lot of parents are like, I'll have to buy goodie bags and give goodie bags to their classmates. We actually prohibit goodie bags at our school. What we do is for your kid's birthday, the money that you're going to spend on goodie bags, please donate it to a charity, print out the receipt, and have your child bring it to school during the celebration. Then your child can share the receipt with other friends because they realize that your child came to this earth to make it a better place. And so money is really used to make the world a better place. So these are just, a lot of it is about like concepts, right? Things like needs versus wants. So we have a lot of things, like a lot of games, like you just have to put in different categories. And kids realize that in life, there are actually very few things we need. Like 99% of the things that we have are really wants, right? So if I ask my kid today, like all these things in a room, like all these needs or wants, and my kid would be like, these are wants. So like, if we don't have it tomorrow, are you okay with it? They're like, yeah, it's okay. I don't have it because I don't need it. All right. So something very basic, I think it's fundamental to like their long-term growth.
What was the kind of motivation, or what do you think your own origin story is of really delving into and knowing these different philosophies and being ready to teach your kid about them?
So yeah, I'm not an educator by background. Again, I think a lot of it is we were all educated in some format. We either, at this stage of our lives, we have mentored other people and we have been mentored by many other people, right? And so for me I think a lot of it is just how I was brought up. And even though Lee and I grew up in a very privileged community, but I know like my parents were very poor. And again, in my book, I talk about how that really framed my philosophy. Like my dad was a farmer in China. So I was the first generation to be born in the city and go to college, right? So like all these things I know well, I remember well because my parents instilled these values in me very, very early on when I was a kid. And so even though later in life, I was able to grow up in a very privileged community, I think it goes back to my comment, right? Deep inside who you truly are and what you value and what your values are. I think it's important to really retain all that. That's all it is. And I'm just trying to pass that to my kids and pass it to the kids in the preschool.
As you were coming up with the curriculum, how did you roll it out and convince teachers to embody it and teach it?
Yeah, I've been asked that question too. It wasn't easy. The first year was not easy. The teachers were like, you're not from this industry. You're not certified. Like, what do you know about education? But what happened was then I started, well, initially you can just say, you just have to do it. This is just the way it is, because it is quite unconventional, what I just said. But once I start sharing it with parents really started to buy into the idea. And once we got endorsements from our clients or parents, then our teachers also felt that there was endorsement and they start to buy into the idea. So I would say, yeah, the first year was not easy. There was a lot of pushbacks, but it became more of a snowball. It was basically became a cycle where they were feeding on each other. So as teachers believed in it, then you could see that they will promote the idea more to the parents and then more parents would buy into the idea. And I tell people the number one reason why parents choose our school is our philosophy and curriculum. That's by far number one. It's not because we have the nicest campus or the nicest facilities. That's definitely not the case. I admit it's because of the philosophy and curriculum. And I tell them, like, all the successful people in the world share common attributes. What is that? Willingness to fail, willingness to get out of their comfort zone, willingness to adapt. That was the philosophy of my school.
Okay, I want to talk about the roll-up game now and then just understand like, okay, so you acquired 5 preschools and you built your own 5th one. I would love for you to just basically go into a little bit about how that game works, right? And so basically you went through that first one, the first acquisition. What was like the multiple that you had to buy it in terms of the EBITDA? And then what did you have to do to basically turn it into, did you rebrand it into your own brand? Like talk us through that first acquisition.
So a lot of it is like buying a house. There are agents that specialize in different industries. So like if you want to get into the car washing business or get into the laundromat business, there are agents who do this stuff. So that's what I did. I actually just went online and I typed in preschools for sale and a lot of listings show up. In the US, saying there's things like smallbusinessforsale.com or something. I actually went to the US. I went to California, looked at preschools, spent about 3 weeks shopping around Southern California, but I ended up doing it in Singapore. So yeah, I contacted a bunch of agents and I started looking at businesses for sale, primarily in the preschool space. And then usually these mom and pop standalone businesses, they trade at kind of low single digit EBITDA multiples. And then of course, what EBITDA are you using? That's debatable, right? Forward, historical, normalized, whatever, right? And then the ones that are losing money, then there's no EBITDA. Then you have to look at things like replacement cost. Like if I had to build one from scratch, how much would it cost? So for me I just spent a lot of time looking at preschools to buy as if I'm buying a house. And then after you do one, then it just becomes easier. Then it's the same network, right? So like in Singapore, I would say I know most of the agents who buy and sell preschools just as they know me. Because once you're plugged into that network, they just naturally call you, right? So yeah, I think after 2 preschools, it just became a lot easier that I just told people like, I told the agents that I'm looking to buy at least 1 a year if possible. So any deals, please give me a call. Yeah, so I kind of reached my goal like 1 per year, 5 years, 5 schools. So yeah.
So when you were shopping, like kind of buying a house, you're shopping for preschools. What were the things that you were looking for to know that this is a good deal for you?
So I would actually want to look for something where definitely is one of the preschools I bought was actually in pretty decent shape. I didn't have to do much. So to me, I treat it more like it's a financial investment. If I buy at low EBITDA multiples, that's a pretty good return, right? Let's say if you bought it at 3 times EBITDA, you get your money back in 3 years, 33% return a year. That's a pretty good investment, right? The other ones that I bought were more like, I would say had a lot of upside potential because usually has to do with the fact that there's a lot of low hanging fruits. Like, oh, they're still using a lot of paper. It's not IT driven. So number one is you can literally just, for example, right? Like a lot of these schools were still using like USB thumb drive, the external hard disk. And so like to share files, they were like using thumb disk and like passing it around and things like that, right? I was like, well, we're already like, this is like 2020 already. We're still doing that, right? But to them, they think like that's the norm. So a lot of it was, I go in there, be like, okay, can I actually just do a lot of very low hanging fruit type of improvements like IT? That's number one. Centralization, right? Centralized procurement. That's number 2. And then number 3 is the biggest improvement, of course, would be school fees, right? Because that's where you get the most leverage. So if I can increase school fees from like 1,000 to 1,100, right? That's a 10% increase. And a lot of that can drop to the bottom line because a business like preschool has a lot of fixed costs. Most of the cost is actually fixed. And so if you can improve the top line, then there's a lot of operating leverage, right? It drops to the bottom line. So to me it's how can I improve the productivity of the business, not so much cutting costs. And so yeah, the school fees of all the schools that I acquired have increased quite significantly in the last 5 years. Not because I'm just like trying to increase fees, but I thought before it was just way too low because when I bought these schools, they weren't really offering anything unique. And then once I introduced these systems, I introduced a better curriculum, then parents were a lot more willing to pay higher school fees, right? And even to this day, I think it's quite reasonable. It's not like it's extravagant, but before it was just like way too low. And so it's a very similar playbook. Every time I go in, I look for these things.
And why did you decide to build one versus just acquire all of them?
Yeah, I just decided to build one because I just wanted to prove to myself I can do it. There's no other reason. And having done it, I don't want to do it again. My lesson is build, don't buy. Pros and cons. I've actually bought one before that failed because then I realized that because at the end of the day, it's all about human relationship. It's dealing with teachers, dealing with parents. And one of the schools that I bought at the very beginning, very early on, it was something that I couldn't fix. Like, for example, if you're buying a business that was established, but the culture is very different or very toxic, it was very tough to fix. You basically had to replace all the staff at the same time and bring in a whole new set of staff simultaneously, which is impossible to do, right? And even if you're replacing staff, like one for one, but if the culture was not built correctly, whoever new that you bring in will still be affected by that culture. And so that's what I learned. I'm like, buying a school is great. It has all the systems, but there's certain things that's very, very tough to fix. And culture is one of them. But if you build something from scratch, it's much easier to institute the culture that you want, right? Because you're building everything from zero. But having said that, I think I would still buy a school than to build something from scratch.
A lot of it is like customer acquisition and brand building type stuff, or what is the reason why building versus buying is easier?
I think from a risk perspective, if you think about just opening a restaurant, right? If you're a newbie coming in, you didn't have a brand name, you never know when you're going to fill up the restaurant. Like, I don't know how you do projections, right? You could open a restaurant. Well, first of all, you might think it takes you 3 months to open a restaurant, ends up being 6 months, right? What happens to the cost overrun, right? Construction delays. Number two is, when do you know when the first customer will come in? How many will come in? By when? You just don't know. Too many variables, right? Versus if you buy something that's already running, yeah, you're paying a premium. But at least for me, I felt like I can actually model this properly. Like, there is a history and I can use that as a basis. And then now that I come in, if I really implement certain improvements, I can make reliable projections of the future and then understand what my payback is, right? And that generally has played out for ones that I acquired. That's why for me I prefer to acquire than to build from scratch.
Can you talk us through the sale process or the acquisition process? So you're talking about multiples probably being around 3 times EBITDA. And obviously by increasing prices and putting in like centralized systems, you probably made that efficient and more efficient and probably increased the EBITDA. When you roll them up together into a package of 5 preschools, obviously it's less risky for an acquirer now, right? And the revenue number is bigger. So are they giving you higher multiples than what you originally acquired it for?
Yeah. So this is something that goes back to the finance background, because when I was in private equity, this is what I was doing, which is you see the evolution of companies as they get bigger, they trade for higher multiples. I mean, ultimately, is everybody wants to take it public, right? So you're small, you sell it to the next guy at a higher multiple. You sell it to a PE guy who will pay a higher multiple, and the PE guy will take it public as like the highest multiple possible. I mean, this is the game. This is how finance is played, right? Having done that, then I was thinking, okay, well, I hope to replicate something similar using my own money and on my own capacity, right? So firstly is, in terms of the sale process, I was very fortunate that I was able to tap into my own finance network. So going back to what has finance done for me, it allowed me to use the network, and it was through this network where I found my buyer. So that was number one. Very thankful. It's actually from my private equity network. Number two, and just a slight correction. So I did have 5 schools at the peak, but when I sold it as a group, I sold 4 because one of them was actually separately divested. But anyhow, when you sell it more now as more of a corporation or proper organization, yes, you sell it at a higher multiple. So usually now these things trade at like a mid to high single digit EBITDA, right? So you get a uplift. Let's say you bought at 3 and you sell at 6. That's 100% jump right there, right? Just on the multiple. But then of course, on the EBITDA, when I bought a lot of these businesses, some of them had like no EBITDA or negative EBITDA, right? So I was able to generate EBITDA for these businesses and then sell it at a higher multiple than what I bought it for. So again, there's no rocket science, nothing innovative, but it's using the playbook that finance people have been doing for years.
I was curious, Anthony, in terms of the clientele of the schools that you're running, because of the difference in the curriculum and the approach, did this appeal mostly to expats more so than, say, either local Singaporean families or Chinese families for that matter?
Yeah, I get asked that a lot. So as you brought it up, I would say our curriculum is not really, okay, it's different in the sense that it's more holistic, at least I feel, than more traditional academically driven curriculum. But the beauty of it is on the academic side, it remains strong. There's no issue with the academic side. It's really more about the soft skills, as I said, all the EQ aspect, right? That I was able to add into the curriculum. Basically, I tell parents, our curriculum allows us to kill multiple birds with one stone. So that's the good thing. And a lot of our parents, they're actually mostly, so I would say 95% plus of our clients are actually local Singaporeans. But a lot of them are people who worked at multinational companies. They may have studied abroad and they are more global mindset. So they get it. They understand that life is not about just getting good grades, which is a very conventional Asian way of thinking, right? And so, yeah, I think it appeals to them. But there are some that I also learned, right? Like in customer service, in marketing to parents, like if they don't believe in something, there's nothing you can do to really change their mind. They just keep saying like, I only care about worksheets. I only care about kids memorizing. You can't change them.
So you mentioned that you were writing a memoir. Why did you decide to write one?
Yeah, I just feel that in my mid 40s, given where I am now, I just feel like I can take a break and just kind of think about life. That's the last 45 years, kind of what happened with my life, right? And I don't really have a habit of keeping a journal. And I thought of this memoir would be a good way to just kind of put everything on paper and then just kind of reflect back on things I've done. And yeah, just take a break from, like, as we talked about earlier, all the rat race, always running on a treadmill. And so that was the biggest reason. And I think the second thing is a lot of questions you guys have asked today. I think they're great questions. And I've been asked these questions by many other people who may be kind of facing similar crossroads as I had in the past. So I thought it would be a good way to put it in writing, kind of what those experiences are, and answer some of these questions. Sure. So that's really the main reason.
As you've been reflecting upon your life, what are some of the biggest lessons or discoveries you've made about your experiences?
I think the first thing is, as Jobs says, only by looking back can you see that the dots will connect. And it's very true. They always do. We just don't see it today. But if you believe in it, then you are a lot more willing to take chances, or whatever doors you open, you just walk through it. And somehow those doors will lead you to where you want to go. So that's one thing that I learned. And again, yes, as I said, like, it's definitely a lot clearer to see how dots connect looking back. But I can tell you now, even if you don't do that, just believe that it will, because yes, it definitely will. I think that's the first thing. The second thing that I learned is that a lot of what we do is actually very transferable to anything in life, actually, because like a lot of people ask me the question, I ask myself the same question, like, oh, what else can I do besides finance? That's all I've been doing, right? But then actually once I step out of that and applied it to, say, preschool or other industries, or look at the big picture, I realized that whatever I learned in finance is very transferable to other industries. So once we stop looking at ourselves like a resume and compare our resume to the person next to us, then you realize, or I realize, that I'm actually a lot more capable than what I think I am. Because a lot of people just look at like, oh, my title. Oh, I'm a managing director of a bank. Oh, I'm an analyst at this. Oh, I'm a director. They always feel like, okay, this is my job description. These are my responsibilities. I've been trained to do these things. And so that's all I can do. And then the person next to me has a better title than me. So he knows more than me, but that's all he can do as well. If you throw all that away and then just think about what you really can do and apply to whatever you see, there's actually a lot of things that we can do that you just never believed in, right? So that's something else that I learned. So yeah, I think those are the two key things. And then the last thing is dealing with people. I definitely learned a lot about dealing with people because preschool is a very human intensive industry. And at the end of the day is how do we build that trust and how do we convince parents to sign up? How do we convince teachers to believe in your mission? And for me, it was a bigger challenge because my entire organization is 100% women. I was the only male in the organization. So it was a huge change for me coming from finance. It was primarily male, very hardcore driven, aggressive people to an industry where it was mostly female and they sign up for this because they truly love children. They have different incentive, right? And so for me is I also learned about how this world is actually very different from just always being in finance. It was very eye-opening once I kind of stepped out of the whole finance mindset and the finance network. The world actually has a lot more diversity and makes me a lot more grateful for everything that I have once I was able to broaden that mindset. Now at mid-40s, I really do think that time is limited. When I was young, I almost died. Yeah, I was really close to be dead when I was a teenager. And because when we're young, we think we're invincible. But now I really think that time is limited. And I suggest people really ask themselves, like, what do you truly value most in life? Because if you really think about that, oh, I found out tomorrow that you would die in, I don't know, in a year, in 6 months, what would you be doing with your life? Like, will you still be doing the same thing that you're about to do today? I mean, it sounds really corny, right? A lot of people have given these motivational speeches on this concept, but it's very true. And so I just want to bring that up to the listeners because you never know. Like I have quite a few friends my age now who have already passed and completely, it was quite sudden and some had advance notice. But yeah, I just want to make sure when I'm on my deathbed, I will look back in life and not regret on things that I do. And so that's what drove me to the decisions I've made throughout my life to be where I am today.
How did you almost die at the age of 16?
Oh, I was in a major car accident. I was 16 in high school. I had just gotten my license a few months before that. And then my friend and I were driving next to each other and he crashed and died at the scene. Yeah, it was crazy. And then I was taken to the police station for investigation. Again, I wrote that in the book. And then, yeah, I had to face his parents 2 nights after that, tell them what happened. I actually went around my high school, which is where Lee went, and give talks. I was very thankful I didn't die. I could have died.
And having a near-death experience at such a young age, do you feel like that what drove you to take a lot of these types of risks in your career?
Maybe. I do think about how you only live life once. And I definitely cemented the concept that I don't want to live with regrets. And so I think subconsciously that drove me to make certain decisions. Oh, and then the other thing I talk about in the book, which also explains why I don't drink, is I was born with a congenital heart defect. So I had to go through surgery when I was like 6 years old. I mean, I didn't think I was going to die, but when you're 6 and hospitalized for like 6 months, it's pretty traumatizing, right? I mean, you do think about like, what if you died? Then the second time was much older and it was very clear, like the vivid moments exactly how I really could have died on the spot that day. So yeah, I think all these things subconsciously just kind of affect decisions you make in life. But yeah, that explains why I don't drink. Because of my heart condition, I can't really take alcohol.
So when you're coaching somebody and you're talking them through life is short, you should do what you want to do since you don't have much time left. How do you walk them through choosing what it is that they want to do?
Yeah, it's, again, I don't want to be grim and be like, oh my God, you're going to die tomorrow. Like, that's not the point, but it's to put things in context in a sense that just bring people back down to earth, that this is something very realistic, right? And a lot of it is, I just want to ask people again, if that was the case, if you knew time is limited, I would ask you to close your eyes and think about, like, how would you imagine living the next, well, let's say you have 10 years left. You knew you had 10 years left. How would you want to live the next 10 years of your life? And then what are some of the happiest moments of your life so far? Because I think those questions allow them to kind of bring up what they value most about life. Like some people may value freedom. Some people may value money. Some people may value friendship, whatever that is, right? I don't know. But it's really for them to bring that out themselves and then be like, oh, okay, so if this is what you value most in life, and yet it seems like what you're telling me, whatever you're doing today has nothing to do with these values you care about, or it's not really reinforcing these values you care about. Do you want to reprioritize your life? I mean, people come to me with these questions, right? Like people come to me, be like, oh my God, like I'm working nonstop, like I'm making good money, but somehow I'm still like not fulfilled, right? I'm traveling all the time. I've like no life to do other things, see my friends or whatever, right? Then again, it's really to bring them back down to earth and then just remind them like, what do you value most, right? And somehow bridge the gap between what they're doing today and get to, or help, if they want, is to help them get to what they really value most in life. I think that's one aspect of it. But again, the coaching is very different. Some people have very specific topics. I'm not here to talk about my value of life. I'm just here to talk about like, how do I scale my business? Okay, that's fine. Like different objectives.
So you're coaching entrepreneurs and business owners today on how to become more effective leaders and scale their businesses. Can you talk a little bit more about what you do?
This is something I've already been doing kind of informally, but now that I'm not in the preschool anymore, it doesn't take up my time. I can do this formally. A lot of people, when they run businesses, or if you ask yourself, like, what's a leader, right? A leader to me is, why does somebody want to follow this person? And it's either because they have a title and they have a very flashy business card, which was either just given to them or because they paid their dues in a company and they were given a very prominent title. And for that reason, they are a leader. In reality is, are they truly a leader, right? Do people want to follow them if they didn't have that title, right? And the second thing is, a lot of people confuse the difference between the leader and the manager. They're actually very different. And I had to learn that myself. And so, yeah, along the way, in the last several years, even when I invest in companies on my own capacity, a lot of entrepreneurs still ask me for advice. And I really enjoy kind of helping them kind of think about how to grow their business, how they should really adopt and develop a leadership mindset rather than a manager mindset. And for those who are already, say, leaders, a true leader, how can they be better, right? How are they able to inspire more followers? Or how are they able to really demonstrate themselves as a better leader, right? So that's something I've been doing already informally. But yeah, I just want to do this on a more formal basis. And a lot of this really derived from not just running my own business, but it's also just having invested in many different companies. I mean, today I still invest in companies, right? Like startups, funds. So I still meet a lot of entrepreneurs. And when I chat with them, then they vary from like early 20s to people our age to even maybe 50s or something, right? And then we just chat about kind of what they're going through, what makes them successful, what keeps them up at night. So I'm always learning from them, just as some can learn from me. So a lot of it is really just for me to start this business, to share with people what I know, but also to share my knowledge of what I see from other people.
What are some of the most common things that you see that you can identify that where you can basically help people?
From a coaching business perspective, a lot of it really is to help that person frame and ask the right questions so they can answer it themselves. As a coach, it's not really to give them the answer, right? Because it's your life. It's the coachee's life. It's not my life. But I'm that person that is outside the box, looking at this box. But often the person that needs the support is still inside the box. So I'm just trying to guide this person as if they can close their eyes and think as if, imagine what life is like outside the box. I think that's the key thing, right? So yeah, there are different ways to ask questions and guide them direct them to discovering that themselves. Because ultimately is this person, this coachee, they need to come up with this process themselves, because you can give them a solution, but that's a one-off thing. Because next time when they run into a problem, they'll get stuck again, right? And you can say, oh, as a business, they can always come back to you. But no, like my idea is I want them to come up with a process on their own so they can solve similar problems in the future by themselves, right? I think that's the key thing. So it's that journey of getting them to be outside the box, looking back at themselves. And then, of course, the second thing, of course, is I will try to share whatever knowledge I have without actually being judgmental, right? Like, for example, like a lot of people ask, like, oh, should I start a business? I'm having a comfortable job, blah, blah, blah. Very similar journey to what I went through. But I cannot tell the person and be like, oh, yeah, I did this, so it's great, you should do the same. Because it could be very different for you, right? Maybe that's not the right thing for you. So for me is, again, I can only say, well, now let me put on the hat of myself, Anthony. This is what I did. This is what I went through. But just to let you know, this may not apply to you. It may not apply to somebody else. So I just have to make a very clear distinction between being that coach, but also being me and just sharing with them my personal experience more as a reference than as like direct advice. And then, of course, if I see something that I think it's just not going to work out, and that's what the client wants to do, I'm also not going to say, no, like, don't do this, right? Again, it's not my life. But all I can do is maybe pose more questions and be that devil's advocate. And then maybe that person will come to the conclusion himself and be like, oh, you know what? Yeah, this actually doesn't work. Even though I know like somehow it just doesn't work. I have people come to me, they give me numbers of this business, or like, I'm trying to get into this business or do this, and they give me the numbers. I'm like, well, clearly from a finance perspective, like I know it's not going to work. But to them, because they don't understand these concepts, they're just so emotional. I really love this. I'm going to do this. So I can't say like, no, don't do this, right? So I have to like pose many different questions for them to figure out like, oh yeah, like I don't think I can pay the bills if I do that, huh? I'm like, okay, well, yeah, you kind of answered it yourself type of thing, right? So that's really my job.
Anthony, have you taken coaching yourself, or are these just learnings through experience that you're able to convey it in a way that kind of makes sense and trying to, like you said, massage it, if you will? How did you learn to do this?
Well, a lot of it is, again, we've all been coached by other people. We have mentored a lot of junior people, right? So it's somehow, we have that experience, right, by this age. So I actually am formally taking coaching lessons now, because I think to be a formal coach and a mentor are different things. To be a mentor, people look up to you because they believe that you have something to offer that they don't have. Like you just know more than them. The relationship is like someone who is like a subordinate versus like a superior and a subordinate, right? That's like a mentor, like a mentee. Whereas coaching, I'm learning to be more, to just be very curious, ask the right questions. So we're more on like even playing field. Even though at the end of the day, I know I'm not. Like people would pay the coach because they believe the coach knows more than them, right? Like otherwise there's no point paying this person. But I still want to establish the relationship that we are more even level playing field. And the way to ask questions, the way to get this coachee to come up with a conclusion is actually different. These sessions I'm taking for coaching is actually very eye-opening as well, because I ask myself the same question, like these people that I have coached in the past, were they willing to be coached because I happen to have this title on my business card that shows I'm their boss? And so they have no choice but to listen to me and take my instructions. It's very different, right? It's like, you can't say no to your boss if he tell you to do this. And then I ask myself like, okay, well, I coached this person. He did what he did. He got to where he is. Was it because the skills that I imparted on him really worked and he really wanted to listen to me, or because he had no choice, right? And so I think a lot of what I've been doing is more of that, where they kind of had no choice, or like I was the investor in their company. So they had to listen to me, right? Versus now it's a bit different, being, as I said, a coach and a coachee.
So how have you been trying to find new folks to coach outside of your past kind of built-in automatic coaching situations, maybe as you put it?
So yeah, this is still very nascent business. we start with LinkedIn. People do actually approach me from LinkedIn, and I've just been helping them informally. So I think we'll continue to use LinkedIn. I want to do that on a formal basis. I hope my memoir will be I guess you call it magnet or some kind of a funnel that people will find useful and then come to me. I think a lot of it is also just word of mouth, right? Like I actually also want to be a motivational speaker, to be honest, as part of this coaching business. Because having now everything I've done, finance, staring at Bloomberg all day, not having to talk to people, to running preschools, to parents, what I actually realize I enjoy is to sell ideas and present in front of people, which is weird, right? I never thought I would like public speaking, but having done it so many times in preschool, I'm like, wow, I actually really enjoy that. And I feel even better when parents sign up after I present. Actually, my biggest takeaway from everything I've done. So yeah, I actually want to do that going forward.
So as you're moving into the new kind of avenue of coaching, have you already signed up some new people, and how has that experience been?
I have signed up 2 people, but they are people I already knew. So that experience has been, it's tough to say because I already knew these people and they knew me, right? So of course the feedback I get could be somewhat biased. What I really need is people I don't know. That would be more objective. But I think having now gone through this whole journey of getting into an unrelated industry and then having exited, I won't call it successful or not successful, but at least I exited in a manner and price that I was satisfied with. I think that definitely makes it more interesting. Like the people that I talk to now are more willing to listen because now there's like a closure and a conclusion to this whole journey, right? Yeah, maybe a lot of this coaching is about word of mouth, right? So yeah, my network's definitely important, but I need to find people that are complete strangers and then see what they think. So if you guys are keen, happy to do it and then get your feedback.
I'm keen. I also asked that question because I've been doing a bit of coaching myself. I don't normally share these pieces, but I've done it. And the ones that work well have been friends who already know me and have faith and or overlaps with the skill set that I might deeply know. I've done some cold asks and it wasn't as rewarding. What I've found for me is actually just to deliver value to those folks before even doing an ask has been the kind of transition and how I've been looking to add new customers. But I think you kind of already hit it, which is through talks, through a book, through like people will know you. It almost removes the cold ask. And so maybe that'll be the springboard as you kind of fill out those pieces. So I think that's why I was curious if maybe just I was doing the cold ask the wrong way, but slowly my view is evolving to be kind of sharing your current knowledge, right? Just as you're already doing so that it's never a cold ask. It's always already a warmed up ask. So I appreciate you sharing your point of view.
Oh, no, not at all. Thanks for that. Or yeah, as you mentioned, maybe do more podcasts with you guys to get the name out there.
So for anybody that's listening, if they're interested in your coaching, Anthony, how would they find you?
Yeah, I think the easiest is number 1, my LinkedIn profile, which is Anthony, last name is Tse. I have a website, which is now being finalized. It will be on my LinkedIn, Institute for Greatness. That should go live in the next couple of weeks or by end of the month, I would say. So yeah, that's more like formalizing this practice rather than doing it informally on the side.
Anthony, your story is incredible. Really value what you've built and respect your perspective. Thank you so much.
Thank you very much for all your time. Really appreciate the great questions.
Thank you so much for listening until the end. If you've enjoyed this episode, please leave us a review on Spotify or Apple Podcasts. It'll help more people like you find us. You can find more about us on wild.show, wld.show. Please subscribe to our newsletter or DM us on Twitter. We'd love to get to know you.